Textbook price action last week and almost an exact repeat of the prior week. Let's review the high time frame structure and talk about what it means for trading the week of September 7th. We've been talking about this basing range, 64.59 to 65.06, for several weeks now. Once again, textbook basing range trade setups last week, almost the exact same sequence from the prior week. 64.59 fails on Monday, long liquidation sells into the prior box range below. Then we get an aggressive sell-off, sell the bounce mode to start the week right into the bottom of the prior range at 63.73. We got a short squeeze Tuesday right into the back test of 64.59, and this was the key moment from last week. This area failed. This area is now supply, and sellers need to keep this area offered on any back tests and then hold under 64.27 for continuation down into 64.02 and below. So some relative weakness on sellers' part on this back test. So you have almost a 100-point squeeze directly into the back test, and they couldn't even get continuation down through 64.27. Then late day they give up the entire move down to squeeze right back into 64.59 into the close. After failing to get continuation down off of the back test, this area then becomes the squeeze point where if buyers are able to reclaim this supply zone, then the short participants from the liquidation will be forced to cover. They'll be offsides, and buyers were able to base above 64.59 all night Wednesday, and once they swept 59 and were able to hold that, we got that short covering offsides move as buyers reclaim the failure point, forcing more of those shorts to cover. This is also a reclaim of the prior range low, the prior box, which favors that range traversal back up the range towards 65.06. Then, almost identical to last week, once we got the NFP reaction, we actually swept the overnight high and current all-time high. We put in a look above and fail and see another liquidation and range traversal back down the range. Almost the exact same pattern as last week, closing the week with an active look above and fail right back down into the range lows at 64.59. We've been trading around the same box range for almost a month now, and it's been a clinic of understanding high time frame structure. When the structure fails, we get a long liquidation. Sellers need to reject the back test of that, and if it's reclaimed, we get that offsides short covering move and range traversal back up the range. Same exact thing we got this week. Range low fails, we get the long liquidation. Sellers reject the back test, and if they're not able to get continuation down, if buyers reclaim this area, we get that offsides move and the range traversal up. Same thing at the top of the box. If you trap above and fail above the top of the range, look above and fail, you get the range traversal down. Same exact thing this week. Failure to hold above the top of the range, failure to see continuation higher, fails back inside the range, and we get a look above and fail that rotates back down to the bottom of the range. Last week, the best trades on the short side were the range failure of 64.59, also back to shorts against 64.59 on Wednesday, and then the look above and fail of 65.32 and the overnight high on Friday. The best longs were the failed breakdown of the intraday low at 63.83, then the sweep of 59 on Thursday, and the prior day low failed breakdown of 59 on Friday. Now let's talk about the plan for next week. The big weekly pivots for next week are going to be 65.32, 65.06, 64.59, 64.02, and the prior week low at 63.73. Now, higher time frame, we are still inside the same basing range as last week in a very similar setup. We had look above and fail on Friday morning above the all-time highs and saw that range reversal down into the range low, and we did put in a sweep of the range low for a little relief rally Friday. So again, 64.59 will be extremely important. Buyers want to take this failed breakdown from Friday and see continuation back up, and they'll have to reclaim 65.06 and demonstrate acceptance above 65.32 for continuation higher. Now on the other side, we have had multiple failures above the range high, so sellers once again have an opportunity to see higher time frame continuation down, but they'll need to hold underneath the Friday low and keep that area offered on any back test in order to see another range failure, and this time they'll need to hold under 64.27 in order to see continuation down to 64.02 and the prior week low. As far as the top setups that I'll be watching, on the short side, you can look at backtest shorts against 65.06, and especially on the failure of 64.59, look for a reoffer for an entry on shorts into the Friday low at 64.52 for a move down the range towards the prior week low. As far as longs, you can also look at a failed breakdown. If we trap below the Friday low and reclaim, look for that failed breakdown entry for a move back up the range. You can watch 64.02 area for potential bounce if we get that failure and see that selling continuation into 64.02. A really strong setup would be the failed breakdown of the prior week low at 63.72. If sellers are able to get continuation down underneath 64.59 and see that continuation back down into the prior week low, watch that area for a failed breakdown. Finally, if buyers are able to sustain above 65.32, watch for shorts on a test of the 65.70 to 75 area. This is the top of the broadening formation that we've been forming for several weeks now, so this trend line will continue to rise throughout the week. But 70 to 75, if we're able to see that, should be fairly strong resistance. You can look for shorts in that area as well. Those are the setups I'll be watching for this week in ES. If you'd like to trade live with us every day, join us at Trade with Insight.